Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Lobo Tiggre from the IndependentSpeculator.com. He's speaking to us from Puerto Rico. You can find him on Twitter at Due Diligence Guy. Welcome back to the show, Lobo.
Glad to be back, Jim.
Gold just keeps climbing higher. What's the story behind that? And are there any cautionary tales to be aware of?
I'm glad you phrased it that way because I'm actually pretty acutely self-conscious and others conscious. I'm not sure there's such a word, but I'm conscious of the desire for cheerleaders here. I get it from my readers. I hear it and I see it the other talking heads online. And of course, it's exciting to see gold hit a new 9-year high. We have literally not seen prices like this since the peak in 2011. And even then, it was very brief, just a couple weeks when it spiked up to 1900, held around 1800. And this time, we built up in a more, advanced, consolidate, correct, stair-step fashion that I see as more durable. So I am bullish, and I don't want to mince words about that. I'm extremely bullish. I do think we're going to take out nominal all-time highs. I think $2,000 gold is an easy target before the end of the year. And you know how I hate making predictions, so it means a lot for me to say something like that. And I think Bank of America's now infamous $3,000 gold prediction isn't really all that far out there. So, yes, I'm a bull. But the second part of your question, I think, is very pertinent. I could be wrong. We could all be wrong. I think it's at the very least, a bit irresponsible to just say, buy, like nothing can go wrong. It's not too late. Jump on the bandwagon now. Like gold isn't near its all-time highs. It's actually important to understand that we are near, relatively speaking, the all-time high, at least nominally. And that does argue for some caution. If one has big profits, I'm a big fan of taking some profits as we go. Don't let it all ride, or at least put a trailing stop loss. I call it an upside maximizer, to make sure that you lock in your gains. Because particularly for long-suffering gold bugs who've been waiting for this, right? We've been waiting for this for 10 years or more. To have big wins now, finally, multiple baggers, 10 baggers have happened already this year. And then to let them slip through our fingers after waiting so long, that would just be adding a lot of insult to injury.
So what kind of things should you be looking out for right now?
Well, our gold bug fans may not be crazy to hear me say this, but silver really is still the better bargain. I have written quite a bit about this over time, and I've updated my take recently. You can find it at IndependentSpeculator.com. There's a recent article on silver and why, not just why silver is a good buy because it's relatively cheaper than gold, and it is. Gold is near its 10-year highs. Silver is near its 10-year lows. Which one is the better deal? So, and which one offers the more leverage to the upside? Just on that basis, I think it's prudent to look for good silver plays right now. And silver bullion itself, in addition to being, I think, a relatively safe haven investment, you can buy the metal itself, for which there's no short if you just own it. And that can offer speculative upside as well as being a way to suck away some savings. So I really like that combination. The same is true in gold, of course, but I see more leverage to the upside in silver. So most silver bugs and gold bugs get along pretty well. Many of them are both, so maybe that won't be too controversial for me to state the obvious there that silver is the better bargain right now. But I also think that it could be one of those situations where it's headed for quote-unquote perfect storm conditions here, where you have monetary metals rising, gold and silver rising because of all the inflation and zero interest rates and all this stuff, while the industrial side of silver and the industrial side of the entire global economy is cooling. So you could have less silver production at a time where you have higher gold and silver prices, and that could put an extra squeeze on silver and send it into one of its little mini manias. There are periods in history where silver has just gone screaming ahead of gold, and it's been in circumstances such as I see shaping up right now. So that's one thing. The other, I'll give you a chance to jump in here if you want to say anything, but the other is actually lowly, unloved, often hated uranium. Right? If gold and silver is cheaper than gold, but it has already risen this year. So has uranium, but uranium is still well below the cost of production. So if silver is a better deal than gold, uranium is a better deal than any of them. It's below the cost of production. You can't mine the stuff profitably at current prices. And even the lowest cost producers in the world, Kazatomprom, they have cut back and they are looking at COVID-19 shutdowns. They're even talking about buying on the spot market rather than mining the stuff. So when the low-cost producers are talking about stuff like that, you know that you're coming, I think we're coming to a crucial point for the uranium market where it could really finally make long-suffering uranium bugs happy as well. So one size doesn't fit all. I understand not everybody's excited about uranium, but if you're looking at gold at $1,800 and saying, gee, that's great, and I hope it goes to $3,000 an ounce, but gee, it is, it's not so cheap anymore. What's still cheap? I have two, I think, really interesting answers for you there.
We'll have more with Lobo Tiggre right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Lobo Tiggre. Just before we went to the break, you mentioned something about a couple of unique opportunities. What are they?
Well, one was silver, just because if you're bullish on gold, I think you have to be uber bullish on silver. It's still relatively cheaper, and I think it offers more speculative upside on that basis and the industrial supply crunch. The other one was uranium, and I'm glad you gave me a chance to come back to this because I have to say, I've been talking about uranium. I felt a bit like a lone voice in the woods on this for some time, but it did actually bottom in late 2016. It has carved out a series of higher highs and higher lows since then. It broke out very significantly this year. It's still below the cost of production. It's still dirt cheap, or perhaps even cheaper than dirt if it costs you more to get it out of the ground right now than it's worth. So there's still a huge amount of upside left in it. But it really has started to move, and I've been really since late 2018. I've been pounding the drum on this, and some of the stocks really got ahead of themselves with the Section 232 excitement last year, and then that all kind of fell apart, and they've been on sale. And I just want to say, if anybody's been listening to us for a while and they've heard me talk about this before, and they're like, "Yeah, Lobo, you've been saying this for a while, but these stocks are underwater." Well, I hear you, and I just decided to go ahead and average down quite aggressively on one of my favorite stocks in the space. I quadrupled my position just because I thought to myself, you've been talking about this, you've been making this argument, you've been saying that uranium, there's no substitution for it, it can't just be done away with. Absent another Fukushima-style event, it has truly explosive potential. Well, if I keep saying that, it seems to me that I ought to put my money where my mouth is, or my keyboard, as the case may be. So I averaged down aggressively on my favorite, or one of my favorite uranium stocks, and literally quadrupled my position. So I want to say that I'm in there in the trenches with my readers. I put my money where my mouth is on this.
We'll have more with Lobo Tiggre right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Lobo Tiggre. Lobo, is there a big economic concern if schools don't open as scheduled this fall?
Yeah, I think that's actually an underlooked or overlooked issue. Funny, underlooked and overlooked could mean the same thing in this context. Never mind. There's a lot of talk about United Airlines potentially laying off 36,000 people. Seems like every day there's another airline laying off thousands or tens of thousands of employees. That's obvious. Everybody sees that. Everybody, I think, is attempting to price that in. But this news about, Trump out there saying that the school should open, the CDC is being too cautious, the CDC saying, no, we're not changing our guidelines for Trump. It's dismissed as politics, and maybe it is politics. Of course, in an election year, pretty much everything that comes out of the White House is going to be political. I'm not going to dispute that. But that doesn't mean that the issue isn't quite significant. The working class, or the working age sector of the population, most of them have children. And if those children can't go back to school, they're going to have much higher than expected daycare expenses, because school is sort of state-funded daycare, if nothing else. They may have other expenses. Having the children home longer could interfere with their productivity and their ability to get back to work, even if their jobs are there for them this fall, without the second wave rearing its ugly head. So I think there's potentially a big underappreciated, I think was the word I was looking for, economic risk to what looks like a social issue in this school thing. And bear in mind, that's just, elementary and high school. What about college students not going back to school? Those kids spend a lot more money than little kids on their lunches. And they rent housing around the university towns they go to. This whole education thing, it's tempting for people, chasing Tesla stock or whatever to think of education is not an investment issue. But writ large, this whole thing as part of the economy is potentially a giant headwind going into the fall that I don't think people fully appreciate.
What's going on with crude?
Let me get my crystal ball out. Given that we are in uncharted waters, I think it's pretty risky to presume to know what's going to happen. And, of course, what happened last March was exceptional. I don't expect to see negative prices for crude again, once bitten, twice shy on that. But it could get a lot cheaper. I have sort of two thoughts on this. I've written about this for readers. Oil's not going away. Despite the environmentalist dreams and the pounding on the table about how every week it seems like there's a new deadline that we have to abandon all fossil fuels by next week or next month, that we're all going to die. Whatever, despite these things, it can't be substituted quickly. The world, I think, is moving away from burning fossil fuels for energy, but that will take decades. And this whole COVID thing and the shutdowns, that's not going to last decades. So as we come out of that, of course oil will come back. Of course there will be higher oil prices in the future. But how that plays out, when that happens, I think it's extremely risky to add the when to the what statement in this case. It could easily be a matter of much lower oil prices in the fall, especially if the second wave of COVID infections really scares everybody back into their homes. we may not even need to wait for a second wave with the resurgence in California, Georgia, all these high-profile states making headlines now in the U.S. We could see oil suffer in the nearest term. So I think this is really not just volatile. Things are volatile all the time. I think we really don't know what's going to happen. I think it's very dangerous for anybody. I think the pundits out there on financial media saying they know and therefore do this. I would caution people. I would urge people to apply extreme caution to anybody who thinks they really know what's going to happen next in the oil patch.
Lobo, thank you so much for chatting with us.
As always, Jim, a pleasure.
My guest has been Lobo Tiggre from the IndependentSpeculator.com. You can find him on Twitter at Due Diligence Guy. He was speaking to us from Puerto Rico. If you have any questions for Lobo or any of our other guests, you can send them to info@HowStreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter at HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.